Alright guys, welcome to part 2 of our Ichimoku introduction training series. My name is Jason, I'm the owner of The808Trader.com, and I'm going to be working with you again as we start to unfold the rest of this indicator and strategy. So today we're going to hop into the cloud. We're going to keep our head in the cloud and we're going to go through it and see what it's all about. So let's go ahead and add it to our charts. I'm going to go over here to the settings. I'm going to add our leading, our lagging, and the fill. Okay, so we have now the cloud, and the cloud is made up of two parts. It's made up of Senku A and Senku B. Senku A is this top line that forms the top of the cloud. And what that is our Tenkan plus our Kaijin divided by 2, projected into the future by 26 periods. So let me repeat that because it's a little bit confusing. Okay, it's another average that is formed, and it's formed from our Tenkan plus our Kaijin divided by 2, and then it's projected into the future by 26 periods. Now what we're attempting to do with the cloud is a few different things. The first is it's forecasting for us where price is going to go. Okay, so by projecting out in the future, that's what we're doing. We're looking at price and seeing how it reacts with the newly calculated average in the future. Okay, so that's the first thing it does. The second thing it does is help tell us what the trend is, and this is super simple. Above the cloud is bullish, below the cloud is bearish. And I mean, if you really wanted to, you could. Some people have that on just so they don't have to look for a trend. You just know that if it's above the cloud, it's strong, it's bullish. If it's below the cloud, it's bearish. Okay, and now the second part of this cloud is the Senku B that you see right here. And what that is made up of is the 52 period high and the 52 period low divided by 2, and then it is projected out 26 periods as well. And just like Kaijin Sen, it's a little slower, so it's the lagging of the cloud basically. So you have the longer term trend here, and I'm going to say long, right, because Kaijin was kind of medium term. This is the longer term trend, and then the average of our Tenkan and Kaijin projected out. So really cool stuff. It's one of the few indicators that I know of that actually does an attempt to try to project into the future to try to help us predict where price is going to go. So it gives us the trend, it tries to forecast, and then it also acts as support and resistance. If you see these flat levels of the cloud, these are really strong levels of support or resistance that have to be overcome. You'll see whenever it finally broke above these levels here, it spiked up because the rest of the cloud was thin. So it acts as support and resistance. It tells us the future. It tries to forecast. It tells us the trend. And then based on the width or the skinniness of the cloud, it also tells us momentum, which is awesome. So skinny cloud is going to mean quick momentum, but in that you'll lose a lot of the resistance and the strength. And then whenever you get these bulky clouds like this, it means we have a lot more strength, but it's not moving quite as quick. So you'll see that whenever price kind of starts to slow down or sit in the cloud, the cloud is gonna continue to be wide because that's an area that it's stuck in. It's strong. It's hard to get out of. Okay. So we know that above the cloud is bullish, below the cloud is bearish. In the cloud means ranging, right? It's dynamically working with Tenkan and Kaijin to create this area. The area is the cloud that we see. So what that area is the space in between trends. It means it's kind of trendless. It's trying to make up its mind, and it gives us an awesome view of where the strength is at. And some people get a little bit confused because you can say, like right now, right, we were up above the cloud there, but if you go to a different time frame, maybe it doesn't. So if you go to a larger time frame, we're actually still bearish, right? We're below the cloud, and it's because people haven't taken the time to actually sit down and learn this. Okay, so if we're below the cloud on a larger time frame, and then you go down to a smaller time frame, and we burst up like this, that's probably a good sign. It's either one of two things, right? It's either a retracement on the larger time frame, a drawback, or whatever you want to call it, or a possible reversal, right? Because there's less candles here, which affects the cloud, Kaijin, Tenkan-sen. It affects them quicker because the periods of the candles are shorter than on the daily chart, right? These are 4-hour candles versus a daily, so you're going to see price react a lot quicker. So you know it's one of those two things. If you were to look left here, you could probably say, wow, there's a lot of price structure here. That probably means if we're bullish here, then if we go to the daily and we're bearish overall, that is probably just a drawback. And you can see here that's basically what it was, right? It went up, got rejected at the cloud, and then went right back down. Okay, so that's the cloud and basically how that works, how it's calculated. Super useful. If you guys decide not to trade this system, I don't know why you wouldn't have these on there just to check out trends, because it makes it so easy. And what's really cool is, like, as you work with this a little more and you start to learn the intricacies of it and how it works, you can project into the future. You can start predicting where price is going to go. But the best part of this system, guys, is that you don't have to predict anything. You can just wait for it to tell you what's going on and then enter. That's perfectly fine. I'm not trying to get in at the peaks and, you know, at the tops and the bottoms. I don't care about that. I care about catching this movement over and over and over and over again until it gives me what I want. And I make a lot more pips doing that than all these guys trying to time reversals and you know, all these fib levels and trying to look left. And, like, guys, look, in 3 seconds you can look at this chart. You know what the trend is. You know that now it's going into a zone here, starting to thin out, right? And every time we get a bullish, or excuse me, not a bullish, a Kumo twist. So you'll see these twists, right? It'll go from bearish to bullish here to a bullish cloud. It's a good sign that price is probably going to do that as well, right? That's it, trying to predict what price is going to do in the future since it's projected out. So we see this kind of getting skinnier here. We see Kaijin on top, Tenkan on bottom, price kind of reacting with it. So I'm expecting here for price to fall right back down below the cloud and to continue what we see in a larger time frame. So I like to use it to kind of paint a picture, and this is how I tell a lot of the people. Like, if you are trying to copy an image, you can divide it up into little blocks and you can paint each little block. The problem is people get so focused in on each little block that they don't see the whole picture. So it's awesome that you can go down to the 4-hour and look at that little block of data, but it's like looking at a small piece of a painting. You need to zoom out, look at the larger scale. Always go to, I do the 4-hour. 4-hour is my favorite because I don't have to stare at charts all day. And then I go back and I confirm on the daily that the trend is going the way that I want it to go. Okay, so use it for that. And I'm gonna go ahead and hop into our settings and add the last piece, which is called chikou span. It's a lagging span here. And it is 26 periods back from current price. Let me go back to the 4-hour so you guys can get a better look here. Okay, so what this does is help us gauge strength. So if it's above price and above the cloud and free, then so right here, right, we go back. This is where chikou span currently is, 26 periods below. So if this is below price, where it was 26 periods ago, it means our strength is to the downside right now. It means we're losing strength. Whereas back here, if we go back 26 periods, you'd probably be around here. It was above price, which means we were stronger than we were 26 periods ago. So check it out, guys. This system gives us trends. It gives us support and resistance. It gives us strength. It gives us momentum. You can use any of these levels for targets, stop losses, and take profits. This system is so intricate and it all plays on one another that you can use it standalone. You don't need anything else. And the Baby Pips recently did a back test, a 5-year back test. And this is the only indicator that was wildly, I'm going to say wildly, because there was, I think a MACD was also successful, but very, very small percentage gains. You could use this standalone. You could not pay attention to anything else and you're still going to be profitable using these basic rules. Okay, so check it out, learn it, spend time in it. It's awesome. I'm just kind of running through, giving you guys the basics on this. It gets a lot more intricate and a lot more detailed. And as I've traded this over the last few years, I've picked up a couple patterns that repeat that you're pretty much not going to read about anywhere else, that I try to share with you guys. I give you guys at least one free trade a day, plus the ones on the weekend, all based on Ichimoku. That's all I use. It is so worth learning, guys. If I could give you any advice, I get a lot of people ask me, hey, I'm a new trader. If you could go back and tell yourself one thing, what is it, so that I can start from there. If it was anything, it was learn this first. If I could have learned this system first, I'd be a lot further along. I would have accumulated a lot more wealth. Okay, so take your time with this, practice with it. Maybe open up a demo account, start taking trades, see how it plays out. You still need proper risk management, guys. This is no substitute for proper risk management. That is the number one most important thing in trading. Okay, forget about a strategy. You could have the best strategy in the world. If the market moves against you at the wrong time, you'll blow up your account. Risk management, number one. Okay, but this strategy is, I think, one of the easiest to master, one of the easiest to get all of those things that you need. I think the problem with a lot of the other indicators today that they make things too simple or too complicated. I think this is just the right mix. You get the things that you want. Okay, so if you guys have any questions, please hop in my trade room. I'm in there all the time answering questions, helping you guys out. It's just t.me/the808Trader free. Yes, it rhymes, and it's awesome. It's on the Telegram app. And yeah, I hope you guys enjoyed this. If you have any questions, leave it in the comments below, and I'll get back to you. I love you guys. See you guys later. Hey guys, thanks so much for watching the video. Please make sure to follow us on Instagram, on Facebook, and make sure to hop into our free trade room at t.me/the808Trader free. Can't wait to see you there.